RBLX stock, Roblox Corp. So it closed the session of the 16th of February 2023, February 2022 at $53.87. And the earnings outcomes were reported, and the folks at Moriningstar say the efforts to age up and globally diversify player base appear to be working. So the company, according to this report, says Roblox posted a relatively weak end to 2021 with slowing user growth and engagement in the US, stoking fears that the firm wouldn't be able to continue its momentum coming out of the pandemic. However, the platform still saw decent growth in global daily active users, which hit 49.5 million users, with improving reach among older gamers, as more than 52% of users were over the age of 13. Engagement also improved to over 10.8 billion hours, up 28% a year ago, versus what it was a year ago. Despite the weak end to the year, January metrics appear strong, with daily active users up 32% year over year to 54.7 million, and hours engaged up 26%. So the folks at Moriningstar are maintaining a $100 fair value estimate, with shares trading at a significant discount to their fair value estimate. They believe investors can gain exposure to the firm's unique model with a large margin of safety, but they expect shares to remain highly volatile. Yes, that's the case as well. It looks that it appears to be the case. There's it's likely to remain quite volatile. Yes, and I'm going to show you the technicals in a minute now. Profitability was also weaker than expected, with the adjusted EBITDA margin down 21.8% during the quarter from 39.8% last year, due to the ongoing investment in headcount and increased developer payouts, while Roblox has been hiring to catch up with the daily active user explosion. The folks at Morningstar expect the pace of hiring to slow down. Developer exchange fees exceeded 20% of bookings for a second straight quarter, up from 18% a year ago. While these payouts will expand as a percentage of bookings, they don't project that the firm will hit its 25% target without changing the Roblox payout ratio. Okay, so let's see what the bulls and bears are saying about the company. Okay, so bulls, this is as far back as the 9th of November. So bulls say, this is Neil Marker from senior equity analyst, says Roblox is uniquely positioned to take advantage of the trend towards increased screen time among young consumers. Okay, let's see. So Roblox's business model allows the firm to self-finance while it focuses on expanding its subscriber base and monetization. Roblox will benefit as its user base grows older and has more disposable income. Okay, then the bears. Okay, that's the same person. This was the same date, 9th of November. Okay, this is bears. Okay, the same person. Yes, it says Roblox's tremendous subscriber growth was highly stimulated by the pandemic. A return to less restrictive lockdown guidelines will cause a major decline in user growth and monetization. Roblox's model will invite regulatory scrutiny and force the firm to spend more time on moderation, limiting margin expansion. Roblox's competitors have more development resources and offer games with better graphics and deeper gameplay. As Roblox users grow up, they will leave Roblox metaverse for other gaming experiences. So that's the bear thesis there. Okay, so let's see. It's pretty much the case. It's just this the issue of the fact that a lot of their users are pretty much young. So that's the risk that is there, and also, and as you read out, it's exploded during the pandemic, but things have changed now. So looking at the stock technically, we can see that what has been happening is that it's been declining. It started to decline when it reached this peak of $134.09 as at the 19th of November. This probably, this was the lockdown was pretty much over at that time. That was when it started to decline and fell below all of its moving averages. But right now it has reached the 52-week low as of yesterday, the 16th of November. So this decline that happened is also a big blow, because after reaching this, what was supposed to be its 52-week low, or rather the damn 52-week low of $56.90, it began to extend, got a resistance from its 10-day moving average, but after a few sessions broke that resistance, and also the resistance from the 20-day moving average, fell below the 20-day moving average, but again broke it, and broke it as of the 15th. It was on a move up, and then came this earnings outcomes, and now fell below all of those moving averages. So I expect the stock to probably retrace slightly. I expect it to retrace slightly further, because of the fact that it couldn't sustain this push above its 10 and 20-day moving averages. So technically speaking, there's a good chance it may retrace further. It's a good chance that will be the case. But given that it's now trading at a discount to its fair value based on that Morningstar estimate, it looks like a stock to watch. To see how it's go, how things will pan out, to see when it reaches a bottom. So definitely it's definitely relevant. Definitely the stock is definitely relevant. But do I expect that it will get to this sort of levels anytime soon? Absolutely not. I don't expect that it's going to get to this level. I expect it to retrace further, trade sideways a lot more, in the coming sessions. Okay, so see what you make of RBLX stock, and we'll continue to update you. Thank you very much for watching this video.